Well, what difference 24 hours makes in the stock market? Yesterday, I was making a video talking about this, giving up on the stock market. Yesterday, the stock market was just absolutely beaten down, huge amount, and so much negativity out there. Retail investors exiting the market, giving up on the market, which has been going on for a longer period of time, but definitely yesterday was a day where you could see a majority of exiting of positions at 52-week close. Stocks are down absolutely huge amounts, 40, 50, 60%, and there was still mass amounts of sellers on them days. And it's amazing what one green day can do, the hope it brings to the market, the investor sentiment change. It just kind of gets a little bit more bullish, and you imagine what that would be like if we had more consecutive days of that going forward. And what happened as well, a lot of it came from China, and basically what came out of China is that they are going to support their Chinese stocks on the stock market, and that led to a lot of the Chinese stocks having their best day since 2008, the financial crisis. That is a big statement, nearly 14 years, the Chinese stocks having the best day off one statement, having the best day in 14 years. And yeah, I think this is needed. A lot of Chinese stocks have been absolutely slaughtered with everything else, and there's so many things down, but Chinese stocks have joined that list. They have been down an absolute huge amount in the last few months, with a lot of tension out there, mostly to do with, I would say, delisting fears. I would say that's probably one of the big concerns, and being very aggressive on the crackdown of certain stocks and limiting the expansion of certain stocks as well. And I think that China have come out and said, no, we're getting to a point now where we've kind of made our point, we're going to support you again. Kind of gave everyone a bit more confidence to go into them bit more riskier stocks, which a lot of investors have been avoiding for the last few months. So yeah, even though there wasn't really that much change to the fundamentals of the company, just that China basically said they're going to support stocks a lot more, the stock market, Chinese stocks a lot more, just meant there was a massive surge in a lot of these Chinese stocks, having the best days since the financial crisis. And something like an Alibaba went up to $102, 33% up today. And I'm going to be honest, I did not even realize how low Alibaba actually got. I did not realize that around about the Tuesday, it was $74. I never even realized that Alibaba got to $74. And to be fair though, it has been a rapid sell-off. If you do look here, it has lost 19% within a couple of days. So it hasn't been down there for a long time. It was just a very, very fast sell-off. But I cannot believe that we are talking about the likes of Alibaba that was down at a $74. That is unbelievable. And then from there, it's rallied back into the $100 range. This is the thing, the stocks are crashing that hard, that fast. There's so many dipping down that it's really hard to keep track of some of these stocks and these opportunities out there. I mean, Alibaba, the king of China, this is not going anywhere in the next few years. It's still going to be a massive revenue beast of a company. It's still going to be a massive profit growth beast of this company. And to consider that this was, a $300 stock and it went all the way down to $77 is just unbelievable. So yeah, this is a very good bounce for Alibaba, but let's not forget how much this has actually been sold off. When you have been sold off this much, you can understand why this stock is bouncing so much. It's down so much. Something like a Huya, not talked about Huya for a while on the channel, but that had a 40% up day today, currently gone up to $5. Once again, it's unbelievable to think this company as well was down at $3.23, at a P ratio of 6, at a 1.14 billion market cap. Now, I can't remember exactly the amount of cash on its balance sheet, but it was unbelievable. This company was getting to the point of view where you would be able to buy out this company, and then you would actually have, on the balance sheet, you would actually have more cash to from buying out the company. I can't remember exactly what it is. I believe it was something like 1.5 billion in cash. So you could buy out this company and then get your cash back for buying out the company, and then before 100 million up. It was bonkers. This is how low a lot of these Chinese stocks are. So even though it's a great day, you do have to look at the bigger picture and go, of course these stocks are going to at least have some sort of bounce, because they're absolutely crazy valuations. And Tencent as well, Tencent having a 27% up day today. A lot of these Chinese stocks had a massive jump in the share price today. And then what that ended up doing, well, it ended up going into the US stock market. Dow was up 0.5, Nasdaq up 2.151, S&P up 1.8, 18, just changed from 19. So this led into the US stocks having a really good day. So you had the likes of DraftKings up 10%. This is very much needed. This has been very volatile over the last couple of months. You know, we at $23, we dived off earnings 27%, and then we came in and buy the dip, and then for no reason it's absolutely tanked again, and now we're starting to go on a big crazy run again. So yeah, we had DraftKings up a really good amount. Something like a T-Doc, I mean, T-Doc is just unbelievable now. You know, I mean at T-Doc at $59, I mean you've got to, when you consider that something like T-Doc has had such a major boom in revenue and customers, and has come to the mainstream even more than what it was pre-CV. Sure, they had a helping hand, but it's kind of sped up the process for this telehealth space. You know, it's moved a lot faster than what it will do, and a lot of them customers, even though they've had a surge, are going to stick with them going forward. And all that benefit they've had from CV, the revenue, I can't remember exactly, I think they were doing 500 million pre-CV, and now they're like doing 2 billion, and the stock is lower than pre-CV, you know, 27% down. And to get to like where you're actually up on the position, you're having to go back to around about here, which is June 2018. This company's had 4 years of share price appreciation wiped out. And this is why a lot of these stocks are booming, because they're just so sold off. The valuations are unbelievable on something like a T-Doc. I mean, even PayPal was having a 5% day, and that's quite a big company to move up 5%. And once again, you talk about another company that's absolutely massively sold off. And this just comes, like I said, a day after making this video, talking about people giving up, retail investors leaving, the negativity that's out there in the stock market right now. And I did think that I had to just hold off making this video because I saw that the Fed talks about interest rates and, is it going to attack the market a little bit, and what's going to happen here. We've had a lot of these short-term macro events that's been going on, and that's what's been pushing the stock market down. You know, you look at a lot of these companies here, nothing's fundamentally really changed with Alibaba in the last 12 months to justify this. Nothing's changed with DraftKings in the last 12 months to justify the drop it's been on. Same with T-Doc, PayPal. Sure, you know, you'd say maybe the valuations are a little bit stretched, but to justify the massive drops that these have been on, unbelievable. But we're in such a negative market, and a lot of these macro events are controlling the market at the moment, that I thought, okay, when this came out, I thought, we know this is going to happen, but the market is so negative now. Is this going to, you know, send the market backwards today? And it attempted it. When this happened, you can see there was a little bit dip off, but we have had the bounce up, and a lot of these stocks are still holding onto the gains that they've had today, which is positive. And this is just sums up the negativities out here. You know, if we look at the fear and greed index, look how, you know, we're at extreme fear 19. I think we're even worse than this. To be honest with you. 1 week ago, extreme fear. 1 month ago, extreme fear. And just think 1 year ago, we were in greed. You know, that it really does show how quickly the market can turn in a year. And this is why I'm still very bullish on the stock market this year. I think very much in a year's time, the turnaround can be unbelievably quick. You know, we're in that much negativity, people cannot see that. But the markets can change so quickly. And this is why I'm still very bullish on the stock market. I'm obviously very bullish in the long term, but even quite like short to mid term, I believe you have so many of these stocks sold off that when this turns so quickly, we are set up for a major, you know, run. And this is why moves like this today don't really surprise me, because we have stocks so massively sold off at really cheap valuations that all it needs is just a little bit of positive news when there's all this fear out there, and we go on a very good run. And that was very clear today. And just kind of going back to this video that I made yesterday, this kind of proves a couple of key points that I made in this video. So the first point is that we are very much now in a very big turning point. This is where I won't want to be short on the market, because at the moment we have so much negativity priced into the stock market. We are down at lows, and fear is out there, and that's why everyone only has a negative view right now. But the positive thing that you have with the stock market is you have the stocks like, say, in Alibaba, that's just at a very low valuation, that sure, there's all that fear out there, but all it takes is a little bit of positive news, like we talked about today, that generally won't really benefit the financials of the company that much, but a little bit of positive news like this will send the stocks on very good runs. And the bulls are looking at a lot of these valuations going, I'm going to buy this right now because it's at such low valuations. At the same time, there's a lot of fear out there where it just needs a little bit of negative news and that kind of momentum soon fades and people go, oh, you know what, I'll buy the bottom another day. And at the moment, we're in a big, massive tug of war between bulls and bears. That's one key thing. So while we go through this period of time, it is going to be very volatile at the moment because the bulls want to kind of keep it, the bears want to keep us going a little bit lower, especially when there's all that fear out there, and that might happen. But at the same time, there's a lot of bulls out there that are looking at these valuations going, I'm going to start buying up this dip now. And you can have crazy spikes up and you can have crazy sell-off because of the fear that is out there. So it's going to still be very, 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 very volatile right now, and especially Friday. Friday is always the interesting day because every Friday for the last this year has basically been a massive sell-off. So that's the one to kind of watch out for. If you ever see a positive Friday, that would be the very interesting point because we've seen pretty much every Friday risk being taken off the table and people have sold the positions and go, don't have any idea what's going to happen this weekend. I'm taking no risk. Will the Ukraine-Russia situation get worse? I'm going to sell all my stocks across on the weekend. And that's what's been happening. So that's definitely the most interesting day to keep an eye on right now because that's the day that causes a lot of the volatility at the moment. Second of all, it's a kind of point of view of how sold off we are. You know, this is a big difference. Stocks are at crazy, crazy low valuations. They're at so crazy low valuations that you only need a couple of bits of positive news, a bit of negativity to fear, and because we have stocks that have just been absolutely sold off, it only takes a little bit of positive news, and these stocks will move very quickly in the right direction. You know, like Alibaba that's up 33% today. There's a lot of stocks out there. You know, another one that's not on this list because it isn't up as much today, but would be a good example was HIMS. Massive sold off. All it took was an earnings report, boom, shoots up 20%. This is what's going to happen. A lot of these stocks are, and this is why I'm still very bullish on the stock market, especially at these sort of prices, because there's so cheap valuations that they can just spring up so quick. It's so sold off. These stocks can move, you know, 20, 30, 50%, and quicker than you know it, this dip that we're being on goes, because that's how cheap we are. And because we're at these cheap valuations and there's a lot of fear out there, this is why you can't time the market. A lot of people now, a lot of retail investors now, big YouTubers out there, are trying to time the market. They think they are better than the market. They think they can beat everyone out there. This is why you can't time the market. No one would have told you today that, you know, if you said yesterday, Alibaba's going to jump 33% tomorrow, no one would believe you. No one would believe you. No one knows. No one can tell me what Alibaba's share price is going to be tomorrow. And even in the long term, it's hard to predict where Alibaba can be in a year's time, even 2-3 years down the line. You'd be able to get it hopefully in about a right amount of price target estimate. You might do okay. You'd have better odds of getting it right in the longer term, but even then, no one knows exactly where these stock prices are going to go. And this is why if you think you can time the market, you can't, because before you know it, this might be the day where investors decide, oh, this is it, this is the bottom, we're going to buy up the stocks, and they go on a massive rally here. You know, if you've been trying to time the market, if you sold Alibaba on Thursday the 17th of February and you thought, oh, I'm going to keep selling it low, and you don't know that $77 is the bottom, you might be waiting on that, and then you think, oh, you know, I'm going to keep waiting on it, boom, that's it, you missed it. You know, it's gone up, and you've sold out a loss now, and you're probably going to end up with the same sort of average that you had, you know, a month ago. You can't do it. The best thing to do is just hold it and average down, and as long as you average down, and as long as you have your average in a decent range, you make money on that. And that's exactly why you can't time the market, because these bottoms, the stock market, can change so quickly. And this is another little bit of proof of that. Now, this might not be the bottom. You know, it might still go on a bit of a dip from here. But this is just evidence, once again, of this is why you just got to be careful of it. And this is how quickly things can change. A lot of these stocks are priced down at the very low valuations. You know, even though Alibaba is still down, you know, has had a fantastic day of 33% up. Let's not forget, Alibaba is still down 66%. So very easily, Alibaba could follow this up with another 30% day, another 10% day. And this stock shoots up to $140 within a couple of days. It could easily happen, because this is how sold off we are. So this is why you just prepare for the long term. if you're a long-term investor, this is why you just position yourself in great companies, good valuations, and you just buy and hold. And you look back in a few years' time and you'll be able to go, oh, that worked out buying the dip in that one. And as long as this is why you can't play the short-term game, otherwise these moves will get to you. This is why you focus on the long term. And long term, you might not be able to exactly predict where that share price will be, but as long as we get back into a bit more of a bullish market, as long as this company, as long as your company grows, its financials, the fundamentals improve, they'll stand to make decent money, especially if you're buying at the moment with the dips that we are on. So hope you enjoyed the video anyway, guys. If you could hit the like button if you're new, subscribe. If you do want to join the Patreon, link is in the description. I post when I'm buying and selling companies in real time on there. And yesterday we posted a live Q&A session, which is 36 minutes long. So if you do sign up to that on the Patreon, you'll be able to watch the exclusive videos on there. There's 2 a week. One of them being you'll be able to go rewatch this live Q&A session that's 36 minutes long from yesterday. So hope you enjoyed it, and I'll catch you in a bit.